you do not know those people.
I do.
You do not know those people, and I am absolutely not cutting that out. Fresh from Medina, lavender lattes in hand, like every real man should. Welcome to the McInnes Marketing Minute with Jay McInnes.
Oh.
And almost crashing into a Mazda.
There's a cooperate here.
Oh, beautiful. So what are we talking about?
The market adjustment, and if it's going to be similar to 2008, what that now looks like moving forward.
Yeah, so a lot of people that we talk to right now, they tell us that they're thinking of selling, but they're actually going to hold off until next year because they think the market's going to bounce back. So, I mean, Jay, tell us a little, before we move on, tell us a little bit about 2008. Tell us what it was like.
It was glorious. That was my first year in real estate. Did you know that?
I did know that,
You
yeah.
should know that intimately.
I know that and many other details about you, unfortunately.
So that year was the year that things adjusted based on everything fun that took place down in the States, and it was a fear-based adjustment, which is kind of, I guess, similar to this. We're having a lot of hesitation of transactions, which is the same thing we're seeing now, which is what the news is focused on. Transaction numbers from this time last year to now are substantially lower. And it was the same thing back then. Yeah.
Yeah, I mean, I think the interesting thing about it is everyone talks about 2008 obviously being the downturn in the real estate industry. And
Well, the most recent one, of course.
Well, the most recent one, yeah. Prior to that was what, the 80s? Was
90s.
the worst major one?
90s, yeah.
Yeah. And everyone talks about 2008 as the worst, but when you actually look at the figures, 2008 prices, homes were selling in the highest they've ever sold before, and it wasn't actually until the following year in 2009 that the market really adjusted in terms of pricing and the amount of sales. So it actually dropped 6.5% between 2008 to 2009. So all those people now who are thinking, oh, I'm going to wait a year to list my home, if it follows suit, the market's actually going to drop more, and so you could potentially be bleeding equity out on a daily basis.
Yeah, and I think going back to that, it's interesting to see that people say, I'm waiting, but then if it goes that same road, which is obviously 50-50 right now, no one has the ball of crystal. The situation is, like we said, the number of inventory that's going onto market and not selling is high, so there's a lot of places listing and coming off the market. So the transaction numbers are what's taken the biggest hit so far, and when that continues moving forward into next year, when people do decide to sell, obviously those benchmark prices, if the trend continues this way, are going to continue to edge down because there's pressure from the top down. There's plenty of inventory, not a lot of transactions taking place. So what are sellers going to do? The only thing they can do is adjust price and become attractive amongst their peers of listings, if you will.
Yeah, I think you need to watch out as well to just be careful for the whole renting scenario, because there's a lot of people who say, oh, I can't sell it, okay, but then I'm just going to rent it just for the next year or two. And in theory, that seems good. It seems like you can make a profit, and most of the time you can each month, but the problem is you are bleeding equity out of your home if you are looking to sell in the next year or two, because essentially at the end of that lease or tenancy agreement, whenever it may be, if the market hasn't taken a rebound and started to increase on the up, you've just lost that equity for almost like a short-term gain. So that's something just to be aware of as well.
Yeah, and I think a lot of people are, I don't want to say blinded by that. It's not a bad thing to buy a property and rent it out, obviously. But if you have, and again, if people bought years ago, the cap rate that they're working with now, because rents have come up so far, is going to be good. It's just a matter of if those, like Ben said, short-term gains of a good rental return today are worth what you're potentially risking by locking a tenant in and sitting on the market or sitting on your equity for a year, let's say, before you decide to sell next year. So the risk is obviously at the potential selling price now to next year, and there's no kind of signs in the market at this stage that anything will
No, it's Eric.
shift back. Rates, I think, are gonna, no one can guarantee anything, but I think very confidently I can say that I believe rates are going to continue to climb, probably quarterly moving forward from here, and that's obviously going to put that downward pressure. I think we got the message from Megan, the mortgage broker, earlier in the week. Every every quarter point is an extra $13 per 100,000 you borrow. So if you're taking out 200,000, that's not the end of the world. If you're borrowing $1 million, we start to add up, and we're looking at that whole debt service equation, not only what the bank will allow you to take, but what you're comfortable paying.
I think the thing is, as well, is I think people get misconstrued. So let's say, just for easy math, let's say the market drops 50%. People think, okay, well, it just needs to rise 50%. Well, no, because if it rises 50%, you're now at 75%. You need to hit 100 just to even break even as to where you were before. And the problem with that is that takes time, and while you're doing that, life and circumstances change, and there's no guarantee that that's going to happen. And if you are in a case of you're thinking you're going to need to sell in the next couple of years, I mean, you can always wait and play that risk if it does bounce back. But I mean, if the market drops about 6.5% like it did in 2008, probably be slightly more than that now with the way the economy is, but then you're looking at potentially anywhere between 30 and 40 grand for a 1-bed, 1-bathroom place if you take the average price. So that's quite substantial.
Yeah, for sure. And I think the main thing is today you know what it's worth. Mm-hmm. Tomorrow you don't, and in 12 months you definitely don't. And if there were indicators that it was going to push up or turn around, like rates staying or going lower or something fundamental, then that's understandable. But at this point, with rates getting higher, things then become less affordable because they cost more to borrow against. Additionally, they could also, I mean, with the rates card, they could also tighten in any other way when it comes to funding in the next 12 months. So there's a lot of uncertainty right now, basically, and no signs pointing strongly that things are, unfortunately, at this point, going to turn around, or fortunately, depending what side of the road you're on. But speaking to sellers, unfortunately, of course.
Yeah, so I mean, I think to recap, it's with the way the market is now, you can still capture a fair market value for your property. Like Jay said, you know where it is, you know where the market is now, and if that's something that you're going to need to do in the next 1, 2, possibly even 3 years, you want to be looking at that sooner rather than later. Otherwise, the risk versus reward is pretty substantial, especially as there's not looking like anything economically or anything elsewhere that's going to spin this change and make the market all of a sudden hit an upturn, if you will. So
I agree.
So there you have it, guys. That's this week's McInnes Marketing Minute on tour. Hit the subscribe button below, write us a review, and I guess we're going to have a special appearance here right now. Yeah, write this guy a review right here. It's an improvement on your face.
Unbelievable. Thank you.
Thank you, and don't forget to follow us on social media. I am Real Benjamin Robinson on Instagram, and Facebook is Benjamin Robinson Real Estate. And Jay?
McInnes Marketing, Facebook, YouTube, and I am Jay McInnes on Instagram.
And that's actually the phrase, I am Jay McInnes. He's not just acknowledging his name in third person. Thanks.
At I am Jay McInnes.
Thanks, guys, and we'll see you next week.
Bye-bye.
So for those of you who don't remember 2008, it was a dark time in terms of real estate market.
Not in Canada. Darker than now. But
It was a vitamin D insufficient time.
vitamin D.
I would
They're not gonna know. They're not
I will
gonna know.
never say vitamin.